Hello and welcome to the latest edition of Share Views. I'm joined by our special guest, Graeme Dickson, who is the stockbroker at Optiva Securities. How are you today, Graeme?
I'm fine, thank you.
Right, are you as healthy and sprightly as the stock market is at the moment?
No, I'd like to be a bit healthier, if I'm honest with you.
Right.
Yeah, but the stock market's good.
But the blue chips up and away. I mean, this is quite incredible. I mean, they're dancing around like minnows at the moment.
They are, and all the right ingredients are there. How long it lasts for is anyone's guess. We've had a good run from 5,700 to 6,700. It seems to have a bit of consolidation, but let's see how it goes.
Right, I mean, allegedly in the run-up to some easing from the Bank of England, so maybe that will help as well, or at least will rise until that happens.
Potentially, yes.
Right, let's have a look at some of the action on the market, what's up and what's down. First, we're on the losers side of the FTSE 350. A few surprises here and a few obvious ones, I suppose. I think the obvious one there is EasyJet, 4-day losing streak there. What's your view on that?
Well, it's got almost everything bad going for it right now in terms of what's happened with the Brexit. It's causing staycation all of a sudden. Yeah. So that's not particularly great for EasyJet. Then you've got the Egyptian crash, several months ago that still is affecting them, and on top of that, you've got problems with terrorism going on in France and Germany.
And the weak pound, of course.
The weak pound is causing the staycation,
yes.
Which is what that's the issue. They've got the oil prices working in their favour, and of course, at the end of the day, it is still, it's a very efficient and well-run business. But they've got a few macro events that are slightly out of their control.
Right, and the banks also weak there. A few of the oil stocks as well. The oil price has fallen over the last few days.
Yeah.
That seems to be directly affecting these players as well.
Yes.
Whereas before they were ignoring the oil price, so that's coming through, isn't it?
That's sort of coming through, and I think one that stands out to me is Cairn Energy. They have they've really now into this position where they've got £400 million of cash, which sounds great, but they haven't got any revenues or any profits. They've been I think they've lost about almost £1 billion over the last 3 years. So, they've got some fantastic assets, and some of those will get monetized, but it will help with the rising oil price for sentiment. Okay,
and just let's go on to the rises, try and cheer ourselves up a bit. Glencore, I suppose, is the standout there with the mining stocks just up and away, aren't they? Well,
they such a highly leveraged stock. They've got $25 billion debt, £35 billion market cap. So when they were down in their lows, when they were sort of in their 50s and 60s, I mean, it was looking, they had, I think, more debt than they had in equity. So that is a company which has now addressed the balance. They want to get their debt from $25 billion down to $15 billion by the end of 2017. They've got the commodities now going in their favour. So things are okay, but one has to keep an eye on the metal prices, the energy prices, and just factor in can they stick to the schedule? We'll see.
Right, and then I think IG Group, you would expect, I suppose, with the market volatility, we've seen the 6,400, then 5,700, and then 6,700 in just the space of a month.
Imagine.
Good for the spread betting companies.
Yeah, it must be. I mean, how many people must have got wiped out? There must be this sort of churn machine that they must rely on. But now, IG are not just a domestic name; they've got the world ready.
Right. Any other names that strike you there, or is that?
Well, Carnival actually, that really strikes a chord with me because they've got all their ducks in a row. You've got the low oil price, that means low fuel prices. You've got fantastic demographics with an aging population in America.
I'm just going to book my first trip on that quite soon.
What, with this exchange rate? And then the other thing that strikes me like Carnival is the Chinese, because the Chinese tourists are coming into the UK in their droves, in the States in their droves. They're going on cruises in their droves, and Carnival will be actually launching a new vessel to go and visit China, pick up Chinese tourists and take them around the Pacific. So previously, the Chinese have had to flow into the States, North America, and catch their ships and enjoy the cruises. Now they've got it on their own home soil.
All right, well, it's innovation there. Let's move along and see what hot stocks. A couple of those I'm very proud of myself, having called them correctly. I will keep quiet about the ones I didn't. But Sound Oil, I think that went up to 45p at best this week. I think I was looking for 45. Well, I thought they would go to 45p once they broke 30p. They did it in about 2 weeks, so wasn't expected to be that quick. Amazing.
They've done really well, and the stock. From what I've been reading, is they really did extremely well acquiring the Tendrara asset from what was previously known as Fastnet. They sold it off, and this is gas asset in Morocco, which has sort of hit all the fantastic high quantities of prospective gas that they could possibly find, and they are they seem to be doing extremely well in Italy as well. So I think with Morocco and Italy, they're doing pretty well.
Right, and I think it's called Sound Energy now, I think. But
Energy,
that was the old name. But the rare earth minerals, good to see the lithium story coming back, reviving a bit, because it was very hot a couple of years back, but it seemed to have cooled off. But rare earth minerals shares coming back. Yeah,
I think that's another one that's been beaten up a bit. Bacanora seems to be doing extremely well, and rare earth minerals have a decent stake in Bacanora. So I think they're just playing catch up with their investment in Bacanora, plus part of it is going up on their own accord as well. So yeah.
And then the would-be Yorkshire potash miner, Sirius Minerals as well, the story's starting to unfold in a positive way. The waiting game, there's so many permissions and hurdles to get through, but that seems to have finally.
I read that they've won all their approvals, all the major approvals anyway. So it's now just a question of developing the mine, and I think I read that Cantors have got a 50p price target, so it's still
some way to go. Yes,
some way to go. No, it's not Cantors. WHI, excuse me.
Okay. All right. Let's just go on to the final slide then. Most traded Sound Energy we've covered. Gulf Keystone. You want to close your eyes with that one, probably.
Well, they did that debt for equity swap, which I think was well anticipated by the market. Surprisingly, it didn't go down a lot more than it did. So it kind of suggests to me that they were probably very heavily shorted, and that was the sort of perfect tonic to get people to close their shorts, because I think the fundraise is being done at 0.82p, and I think that's where the debt holders will be converting their debt into. That looks like it's poised. And
then just finally, Lloyds Group, Lloyds Bank, job losses there, I think 3,000 job losses. Quite strange that they had that £2 billion dividend payout, but now they're a bit short of cash, and they've got to put people out of work and make £400 million of savings. It doesn't quite add up, that one.
Yeah, I'm not sure how the employees will feel about that, but shareholders will probably,
quite happy. Yes.
Some shareholders, immoral ones perhaps, will be quite happy about that.
Right, okay, well on that note, Graeme Dickson from Optiva Securities, thank you very much for joining us today.
Thank you for having me.
We'll be back after the break. Welcome back to Share Views. I'm joined here by one of the UK's best known fund managers, Gervais Williams, who's Managing Director of Miton Group. How are you today, Gervais?
Very well, thank you.
Right, have you survived the volatility, the headwinds of the last month? How's that been for you?
Well, generally, it's been very volatile. It's an opportunity for active fund managers, but of course, overall, a lot of small companies got labelled as domestic, and we did see a lot of share prices coming off. That was an opportunity. We've topped up some stocks. Some of them recovered, still some with more recovery to come through.
Right, I've just one question, my personal question here. We sort of hear that the institutions are sitting on lots of money, lots of cash. Does that mean that when the market fell, they were able to wade in and buy, or was it they were actually so surprised by what went on, they got rid of some things and they rejigged rather than actually adding money to the market?
I think what actually happened was that quite a few fund managers were actually shocked that quite a lot of different sectors actually turned out to be correlated together. So there was a certain amount of cash which was raised from those, and that's really what has been holding some of these stocks back. But also we've seen a little bit of uncertainty about redemptions. Some people were uncertain there might be a lot of redemptions, which actually didn't really come through in the end. And so there was some cash probably held after those sales, which is now being reinvested.
Right, and on the house builders, which I think is probably the highlight of what happened in the last month, you have something where the situation hasn't really changed, supply and demand situation hasn't really changed. the Brexit could be any timetable or maybe no timetable on that, and they're down 30-40% in some cases, the big ones. How do you read all that?
Yes, I mean, it hasn't really been much of a slowdown. I mean, a lot of people who voted for Brexit weren't surprised because they were the majority. So, in fact, of course, people went out and they've continued to buy houses and such like. I think there's a slightly longer-term worry that perhaps some of the costs of retail, factors, things like imports, such as, perhaps foodstuffs, petrol, those kinds of everyday things are going to start going up in price, and that will mean that actually the spend on more discretionary items will come under pressure. And I think there may be some possibility of some companies withdrawing their headquarters from the UK and putting it in another EU country, and I think that will lead to potentially some job losses. And as that comes through, you may find some of the bigger ticket items like houses coming under pressure at that stage. But just right now, largely unaffected.
Right, okay, well, we've got a few slides for us to have a look at here. Banking stocks, Barclays not exactly flourishing before the vote, but what's your take on it now?
Well, I think this is an example of the kind of sector which has actually been correlated with the housing market. So these are domestic companies. These are companies which are vulnerable if there's a UK recession. And so although Barclays does have some international operations, clearly it's a big UK bank, and for that reason the share price came down pretty hard and actually has largely stayed down. Small recovery because of the US operations, some of the overseas earnings, but generally been pretty disappointing for most investors who've had it over this period.
Okay, next up we've got Lloyds, a few job losses there, and they need to save money after giving out their £2 billion dividend earlier in the year, special dividend. What's your take on that?
Yes, I mean, good and growing dividends are absolutely central to the market. We've seen quite a few dividend cuts across the market, so this is a good story of a company which is actually increasing its dividend. Though again, once again, we've got the issues to do with the slowdown in world growth, the slowdown in the UK if we have a recession, and the vulnerability. And I think the job losses are partly a result of the fact that actually they're worried about the outlook for the UK economy in the short term, and they're worried about the costings on the back of that. So yes, they've had some figures recently. They weren't too bad, but people do worry, and you can see again the share price has hardly staged any recovery at all since the Brexit.
Right, the yield just under 3%. I suppose it's better than what it was quite a long time.
Maybe less dividend growth than perhaps people might have assumed even 6 weeks ago.
Okay, let's go on to we've got the challenger banks here. It's an awful term, but anyway, I suppose it does have a basis in reality. What's your take here?
Again, these companies are often involved perhaps in buy-to-let markets or some of these newer markets coming through. And so again, although they're growing pretty fast, they're pretty inexpensive companies in valuation terms and actually are growing very nicely at the moment. Again, you've seen the share prices take quite a big hit. Valuations have come down substantially. And so if anything, quite disappointing that some of these stocks haven't picked up a little bit more. But anyway, there they are. They look pretty much like the mainstream banks in terms of their share prices.
Right, I mean, I see the PE ratio there is at 6. Does that help? Is that helping people regard them as value plays, or is just the lack of dividend the problem?
I think it's ultimately, some of them have been growing quite well. They've been investing in the business and therefore not paying a big dividend yield. Others are working towards paying dividend yields. Quite a lot of these are recently issued stocks, so quite a lot of new investors hasn't had a long period on the market. And I think all these factors have come together. And so the valuation is cheap, but being a highly geared financial, of course, it means that you have to have very good confidence in the UK economy, and some people are worried about the buy-to-let market.
Right, okay, well, let's go on to the next challenger bank, Shawbrook.
Yeah, Shawbrook, so very similar to Aldermore. I mean, what's interesting about this one is it has had results again recently which confirmed that current trading is absolutely fine. There was a pullback on the first few days after Brexit, things have stabilised again. And so underlying trends are looking pretty good at the moment. As I say, people are worried more about what happens in the next 6 and 9 months within the UK economy.
Okay, let's get on to the airline area, which has been it's been difficult for many reasons. Some are within their control, some outside their control. Is this something which historically we see the dip on the bad news or the high oil price, and then it's back up again? Is it that simple?
Yes, I mean, they were under some pressure ahead of time. As you know, of course, international travel has been a bit under pressure because of the terrorism events, and that's put some people off travelling. And of course, the oil price had recovered, which was hopefully hedged in most cases, but it was a worry for people that they would have to pay more in due course. What actually happened with the Brexit event, of course, was that that put a further uncertainty about travel to and from the UK. Of course, the cost of overseas holidays has gone up. The cost of hedging, maybe oil prices will be higher going forward because they pay for their oils in dollars, so extra cost. And that really has sort of set back the share prices. So in this case, I think we had a negative trading statement from the company, actually, I think on the day of Brexit or the day after Brexit.
Right, okay, and I think this is the worst of the bunch, EasyJet. I think they lost £40 million. They didn't want a Brexit anyway, and just everything's gone against them, I think, at the moment on the fundamental front.
That's right. I mean, it's the same feature really, with a lot of overseas costs in terms of dollars for the fuel, and not much pricing power at the moment because there's less usage of aircraft because people are a bit more cautious about travelling. So both of those combinations has been difficult.
I mean, would you be waiting? I mean, the shares are now right on the lows of the year. Is this a potential? Do you see this as a potential point to think about buying them, or would you still be waiting?
I think what's been interesting is most fund managers have got too many stocks which are correlated together. So we've got the airlines, we've got the banks, we've got the house builders, they're all correlated together. And I think the fact that fund managers have found that all of these stocks have been moving together has meant that they actually wanted to reduce their overall weightings in all three of these sectors, which is why I think we've seen so little bounce in most of these stocks, in spite of them being relatively inexpensive. And of course, EasyJet is a very strong market position. It may not have much pricing power now, but it is a very commercial operation and it will have a decent future.
So we've realised through Brexit correlations which we didn't actually know before. This is
I think that's the point. That's the field which is really unsettled for managers, and that's why you're seeing quite a lot of turnover in the stocks. You can see turnover in EasyJet's been quite high over the last sort of 4 weeks or so, and that's really fund managers jostling around with their portfolios to take some of this correlation out of their portfolios.
So it's not only babies being thrown out with bathwater, which is the normal thing, but but also sectors which seem to be tied together as well.
Absolutely.
Which are not related on a fundamental
basis. I think, if you'd asked fund managers beforehand, they wouldn't have put all of these sectors to be quite as correlated as they were, and that, as I say, that was a bit of a shock for them.
Okay, let's just go through the next stock there. Ryanair, similar situation to EasyJet?
Yes, if anything, actually, the trading statement was very good, actually. The underlying operations probably less affected than EasyJet. Maybe in part that's because it's obviously based out of Dublin, therefore has a cost base which is more euro-based anyway, and so they may get more opportunity to pass on some of the cost increases due to fuel and such like. But who's to say? I don't know. The point is, it came out with some good trading statement. It probably holds back expectations a bit.
Oh, well, thank you to Gervais Williams, Managing Director of Miton Group. Hopefully we'll see you again soon on Share Views.
Thank you very much.
We'll be back after the break.
Hello, I'm Scott, part of the team at London South East. Today I'd just like to take you through a tool we have available for our premium subscribers. If you have live prices or level 2 data virus, you'll actually have a tool called My Terminal. It allows you to see your stocks and shares all in one place, whether it be chat, share prices, recent trades, whatever you need to look at. I'm sat here on my laptop pretty much as you might be, or your desktop at home, and I'm going to actually give you a bit of a tutorial and take you through it step by step as to how you actually use My Terminal and get the benefit from it. On our homepage, you can find My Terminal two ways. You can either go to the Members tab at the top right hand corner, or you can actually go the way I'm going to go into it, which is by the left-hand navigation there, which says My Terminal. This is the terminal itself. So now I'm actually in My Terminal screen. You can actually have different layouts for potentially every share you have, or if you have, say, a sector like banking stocks you're watching, you could have layouts for actual different sectors, as I say, in different stocks. First thing we do here is add layout. I'll make it known as Share Views, which is the name of this program, for argument's sake. First thing you need to do is add new item. As you can see, there's lots of things here. Because you'd either be a live prices or a level 2 subscriber, you'll actually have live prices within this terminal. If I put live prices in now, you won't actually see it blinking away at you such as you would for the website lse.co.uk, because I'm actually doing this demo out of market hours. So first of all, let's add a live share price in there. I've said it a few times, I don't know why. Vodafone, let's have VOD. It's got the same search engine, the same way of looking up stocks as you'd find on lse.co.uk. Here we go, straight away. As I said, we're out of market hours, so usually you might see, especially with a fast traded stock such as Vodafone, you'd actually see that blinking away at you. So you've got a Vodafone there, you can actually see if it's gone up and down today, the price and the percentage change as well. Moving further down, data grid. Back to, as I mentioned a little bit earlier, if you're looking at, say, car retail, if you're looking at tourism, whatever it might be, you can actually set this up and name these grids for yourself. So I'm going to say banks here and call this banks. And then let's add a couple. So say Lloyd's. and Shawbrook, for instance. And again, this is just keeping, if you've got a sector, in this case the banks, you can actually see perhaps the trends of it. You can just get a snapshot immediately, a little bit like your quick picks on our homepage of how individual shares are doing on any given day. I've actually decided I don't want that anymore, so I've now deleted it. As you saw the little cross next to the green button on the actual data grid itself, and it's on each box as well. You click the little cross and it gives you the option here to actually close the item, get rid of that box, and now you can see it's gone. But let's add in some notes as well. Leave it as my note, and I think it's most appropriate here to say DYOR, do your own research. So that's my note generally for this. What else have we got here? Recent trades. Very popular to see, again, potential trends, the way any particular given day is going. I'm going to choose IAG, which I think Gervais Williams spoke about a little bit earlier. And again, straight away there you've got the trades. They will stream as well in market hours. So I mentioned earlier you can change the column width and number of columns. It can be useful if you've got lots and lots of data here. So for instance, the thing I love about this is the fact that you can actually move your panes, your information panes around. So I'm just grabbing on my note there, and as you can see, I can pull it up and pull it there next door. So they're very, very visible to you. Same thing, I do that with the live share price of Vodafone as well. There you go, and you've got it very much straight in front of you. I've got it at 5 columns, of course, and so therefore I could have 5 across. If you want it just for 2, you're perhaps on a smaller screen or something, absolutely easy to do that. Also, you've got the column width there, so if you actually want to fill your screen, have a little bit bigger, more spread out data, perhaps easier to read in some ways, great. You can just pull the slider there and you can change column width as well. So we've got a few items now. The board's getting populated and the dashboard's getting quite populated. You've got share charts there as well, so if you want to see again more trends versus what's happening on a daily basis, you can put your intraday graph on there and your 3-month graph next to it just to get a flavour. Share chat, we believe we've got the biggest share chat board in the UK, also fully moderated. I'm going to put on recent share chat, and that should populate in a second. Even though I'm out of our market hours, this actually should refresh. So people are on our boards all the time, and posts will be coming in, every few seconds. So this should actually refresh as you're watching it, if you like to keep up with the noise on the boards. Oh, there we go. Just to prove a point, we saw a post slide in there. And for the people on our top package, we have the news alerts, which is Alliance News Pro, and you can also, as you see there, get very immediate news headlines, perhaps which will move stocks and shares, and again, you might be able to nip in, form an opinion based on just a headline, perhaps get slightly ahead of the game. I'll just delete a couple of panes here just to make this a little bit more decipherable again, and then show you one final thing which I always like on this. You'll see the little spanner there I'm pointing to on my notes, and this is on a lot of the panes. You can actually, again, to make it more distinctive from pane to pane, you can actually try different colour schemes quite simply. So I'm going to look at Swanky Purse, strange name, but there we go, and Swanky Purse, so therefore you can see my notes have had a different colour applied. Just quickly do another one. Let's have lightness. I don't know if it's in, there you go. Quite interesting. Again, it just helps you pull out exactly what pane you're looking at. If you actually go into the chat board on the configure button, that actually gives you perhaps even more interesting stuff to do, as in you can put the number of posts. You might literally just want to see the last 2 posts, or you might want to see the last 10 posts. Instead of actually giving you a way to change the colour of your pane, that gives you the way to actually control the number of posts you're seeing on that particular pane. If you want to, you can rename the layout as well, as you can see there. So I can call it Share Views 2, unimaginative, but there we go. Share Views 2 and rename my layout. And of course also I can delete the layout as well. I mentioned earlier, if you've got multi-layouts, that drop-down box there allows you to see your multi-layouts and choose which one you want to have sat on your tab at any given time. So I'll delete that layout. If I hadn't have deleted that layout, once you've closed your window, the next time you come back into the site, log in again, you'll actually see that there. So it's not as though, of course, each time you're having to repopulate your dashboard, it's there ready for you to go. So I hope that's a very useful tool for you. As I said, if you subscribe to our premium services, that tool is all yours. Thanks for watching.